told Bonnie I'll actually email her.
Okay. Yeah, we usually wait 5 or 6 minutes to get our test and then it just for late present. Okay, now we're live. Alright, anyways, watching, wait a couple logging in. You know where to put the questions? We have a guest speaker today. So I'm going to go off the commercial. To go over CPA stuff.
Yeah,
Stuff
exciting stuff, right? I'm like, oh my gosh.
You have to deductions. So if you don't, are you a CPA?
Yeah.
If you don't have a CPA, get one. First one answer. Because I'll tell you, it took me several years to figure out that I needed a CPA. And the moment I did say it. Save a CPA, save money. Otherwise, you're just shuffling money off the IRS. She'll give you the pointers, and then you guys can ask questions about it. But
It's actually, it's Damiana. Okay. Damiana. Bianca, Claudia. Claudia, okay. You can put, like last week. I'm sure I'm gonna, yeah, I'm sure you get that one. I know people might even be thinking with it. Okay. But it's just gonna have to live with it, you know? Yeah. So how long have you guys been doing this?
I'm only 5 months.
Okay.
Yeah.
8 months? Okay. So how is it going? You too? Okay. So Greg's thanking you. That's good. Okay. It's good progress now. Yeah. How was it passing the exams and all that? I know that those could be no. Tough. Yeah. Really? Yeah. How long is the exam normally? 4 hours?
They give you that.
4 hours.
They give you a couple hours.
So is it just Nevada or is it maybe national impact? Okay. So you can sell real estate, isn't it? Like you can go to, let's say you go to California. So you like for people. Well, what cost do you have that today? Oh my God, so yeah. Hey, how's it going? Oh, you do? Oh, no. Yeah, yeah. I might have to make copies for you guys for these ones to show up. Everybody was complaining, they're like, why aren't you doing that? Why aren't you doing that? $3. Let me go over that real quick. I'm gonna make copies. Yeah, so that was pretty cool. What's your name?
I'm Preston.
Preston, okay. See if I can do this. Nice to meet you, Damiana. You want to hand out? Are we even? Yeah, I think everybody has one. You guys have one? So I just, for anybody that comes in. Is it just one of you guys? No. All right, I'm getting one. You want one? He wants one. Okay. George wants one. Here you go, George. What do you guys have questions? Lots of them, because I don't do PowerPoint, I don't want to do PowerPoint, I don't want to bore you guys to death. This is exciting for me, but it may not be exciting for you, so. Hey, look at this.
It's hard to do.
This one, huh?
And it's hotter than the fire truck.
Yeah, because I'm probably standing up here with coffee and two layers, but yeah. Well, it was 65 degrees in here when we were doing it. You should fly. Right now?
No.
No, it was 65. It's still on in here. I I guess I have until here to, no, I don't know. That's what she told me, I have until the end of the TV. Okay. Must be an Eastern European thing, because I'm always cold. I know. But right now, yeah, always, always, always cold, but it's a little warmer here. Did you get Greece probably grew up in the day? Yeah. With all those winters. Yeah, and then we come up, yeah. And now we're cold. I know. Yeah, I don't know.
If you're gonna be here, don't grow up.
Yeah. Yeah.
You mean like a child.
When did you move to the US? 2 years ago. Oh, wow. From where in Romania? Oh, Pacific. You're from here? No, I'm actually from Burgas, right on the Black Sea. Oh, yeah. We got somebody from another office. Yeah. Who's coming in? Hey, how you doing?
Good morning.
There you go. Morning. This is how popular this class is. Yeah. Because people want to know this stuff. That's okay. You're smart.
I'll share if you don't.
What is it? Is that like a fig Newton type of? Oh, I'm good. All right, I got you right in the center. Yeah. You're right. We're good. Yeah. Okay. You doing the class too? Hey, morning. Here's one. Oh, hi. Oh, yeah, sorry. I know.
I'll be teaching second or
Oh. He did, yeah, he did. All right, we can get started, and then if you guys, as people come in, we can. I want to make this fun. I sat at home and I was like, how can I make taxes fun for these guys? And you can't. You cannot possibly make taxes fun. I totally geek out on this stuff, but I know you guys don't. So I'm just going to tell you a little bit about myself, and then I want you to ask me as many questions as you possibly can because I'm here for you. So we're going to go through, like Vanya and Stephanie, right? Samantha. Sam. Okay. We kind of talked about different topics, and there's so much out there. The laws are constantly changing. We get a new president. We get a new law. Everything it's constantly moving. It's constantly changing. So the taxes for 2022 are going to be different. So a little bit about myself. I'm originally from Bulgaria. I came to the U.S. when I was 15. I came directly to Las Vegas. I didn't speak a a word of English, nothing. I actually watched Jerry Springer, don't judge me, and that's how, because it was like very basic English, so that's how I learned English. I went to Valley High School, and they put me in a second language class, so nobody else spoke English. And then I was really determined to get out of there because I hated high school. So I took the last 2 years as one, and I got out of there. I went to UNLV. I got my undergrad and master's degree in accounting, and then I got my CPA license in 2009. Um, Married, I have a 13-year-old boy, so it's teenage years, and I also have a baby, and she's 14 months. So huge gap there. Yeah, so that's me. My mom lives here, so she helps me with the baby. And tax season is coming. I wanted to kind of go, we're going to focus on booking deductions today for real estate tax. So I know some of you are, which I love, some of you have been in real estate 5 months, 8 months. How about you?
I was looking to move and that's one.
Okay, so 1 year then. Is that a year? Okay, okay. You told me you've been doing it forever, so, and ever, and ever, and ever, and ever, and ever, and I'm sure the real estate market has changed, and reductions have changed, and, so, quickly, I wanna just go around the room and give me one fun fact about you. So, Bonnie. I'm a hockey mom. Hockey mom, okay, love it. Claudia? I'm a hiker. You're a hiker? I'm a hiker, yeah. Okay, what have you hiked that's been challenging, the most challenging? Angels Landing? Angels Landing, did you go all the way to the top? Yeah. Oh my God, no thank you. Preston, that's awesome. You do? Oh my God,
Or maybe that is the.
or maybe, yeah, with personalities, I don't know. So, yeah. Okay. Bianca? Wait, that's doesn't happen a lot. Stevenson.
I'm a basketball guy. I was 16 year old, 17.
Oh my gosh. You look really young. Oh, yeah. I'm sorry, I told you his name.
We call him Good morning. I'm from the Caribbean. I was born in Cuba, but I've been to
Yeah.
13 years old. I'm a big boxing fan and being that Vegas.
Yeah.
It's boxing capital of the world.
That's really cool. Sports.
Better than politics and Texas.
Yeah. Have you ever watched like the UFC fights or?
Yes, there was a big one this week.
Yes, there was. I worked on all of their tax returns, which was actually super fun. So we've done the UFC guys and all the boxing matches and yeah.
You guys don't make as much as the
No.
boxing guys.
Oh no, and the people that own the company, yeah.
Dana is doing it.
Dana White, yeah, that's right. And what's your name?
We call it.
Kellyanne? What do you got about Kellyanne? How do you spell that?
Really complicated.
Okay, we'll move on.
But I used to date a girl that is from Bulgaria.
Oh,
wow. From Bulgaria.
Okay.
So I get like she's living on grocery stuff when she goes to see her grandparents for like 2 months after.
Yeah.
And her mom is cooking like the most amazing
Food, yep.
really good.
Yeah, okay. And how about you?
I'm Danny, I'm pretty boring.
That's a fun fact. Okay, we'll go with that.
I'm a grandpa.
All right. Okay, so we'll get started. I think the people that are online, I can ask you, so we'll just move on. So what do you think the number one reason is that people miss a lot of deductions on their taxes?
They don't know what they're doing.
Laziness, they don't know what they're doing. Always, and I emphasize that with my clients. Like, how many of you wait until April 10th to get your stuff together? No? Good. September? October? If you file an extension? No, right? So I always tell people staying organized because if you have to go back to January, a year from now, and actually go back in and pull up all of your receipts and everything that you did for that year, you're going to miss a lot of things, right? How many of you sitting here are business owners? Everyone should raise their hand. Every single one of you, because what you get is a 1099, right, from Cornell Realty. How many of you are doing this full time? Do you have other jobs? Okay, so that makes a difference sometimes. So number one is you have to stay organized. I see you have a laptop. How many of you keep track of all of the expenses on a monthly basis?
Those two boxes you still really keep there.
Cash receipts, and that is a great idea. Put it in there. A lot of people like when you go to the gas station, print a receipt, throw it in the box, and a lot of people don't think about that. How many of you have a designated credit card just for your business expenses? That's an idea because everything that you put on that credit card related to your business is going to be tax deductible. A lot of the credit cards you can actually download it into Excel. It makes it a lot easier. You have so many different categories of business expenses that people do not even think about. So I kind of thought we can break it down. And please ask me questions. If you think of anything, just ask. How do you stay organized? You can use Excel. QuickBooks has a sole proprietor app that's like $5 a month. You need $45 to keep track of the expenses, and it would be worth your time at the end.
What's it called?
QuickBooks sole proprietor. QuickBooks, yes. So how many of you have formed an LLC for your real estate? Not many. I know in Nevada, you can form an LLC, but it has to be your name because there's certain rules that have to be followed. Like you can call it ABC LLC. It has to be a name followed by the LLC. You can absolutely do that. There is a lot of tax savings when you form an LLC. Yeah, you have to pay a fee every year to the state. It's $350, but it's worth it because it provides you protection. Number one. And two, what happens with an LLC is, let's say you start making a crap load of money, because right now the real estate market is crazy. There are tax saving strategies when you have an entity versus how you report your income and your expenses right now. I don't want to kind of get sidetracked with this, maybe because this is a whole different topic, but just something to think about as you grow in this and as you continue to do this. You get more clients, you start making really good money. We don't want to give all of our money to the IRS, right? Because right now, the way you guys are filing taxes is you get your 1099, you get whatever expenses you have, and then you file it on what's called a special fee. Let's say you make $10,000 net, you pay federal income tax. On top of that, you pay 15.3% in self-employment tax. So you might end up paying 35 to 40% just in taxes because we're not using any type of tax money. So we can go through like the marketing tax deductions for real estate agents. I kind of broke it down on that list. Advertising and promotion. So for all of you open houses, who pays for the open house sign? Does the company pay for that, or do the real estate agents pay for that? The agents normally, or 50/50? Okay. We pay for all of that. Got it. But some of our agents will follow Cornell. So there's really no cost there. And for Rose, the team, you'll be able to send through all the kinds of things that I'm going to do. Okay, yeah. So exactly, all of those, and again, I mean, this is probably add up. So that's definitely a business strategy. Yeah. What is it? Education, yeah. Well, all of you, like whatever. Yeah. See, yeah. So all of you continuing education, that is requirement for your license. That is absolutely 100% tax deductible. If you have to sit for the exam, whatever you pay for the exam fee is fully tax deductible. So back on the advertising and promotion. So if you have like yard signs, I don't know if you guys do that, or if you have like a listing flyer or anything that you have. All of that. Well, anything related to that would be tax deductible. Your business cards, I don't know if you pay for the business cards, but if you make your own business cards, definitely take the expense for that. I don't know if each agent has like a website of their own. So if you have your own website, that is a tax deductible expense. Maintaining the website, sometimes you have to pay whatever company, like GoDaddy, let's say, I'm going to say that as an example. If you pay monthly fee to maintain the website, tax deductible. Write it off. Again, it's extremely important to keep track of all that because I'm telling you, when you sit down and whenever you decide to do your taxes, it's overwhelming. You're not gonna want to do it. So sitting every month and just kind of reading an Excel spreadsheet. That's all it takes. And it's easier for whoever does these taxes, like here it is. I have it all. If you need receipts, I'll have the receipts to you, but it's all right there. I don't know if you guys do direct mail, but I know a lot of people mail out postings and stuff like that. That is also a tax deductible 100%. If you have any type of advertisements on Google or social media, like you can use Facebook or I don't know if Instagram has advertisements, but okay,
You can take back all you can say like
whatever you want. Like I don't know if LinkedIn may have if you have a professional LinkedIn page, also tax deductible. Um, Management costs for running the ads, same thing. Anything related to that, you can spend. There's no limit on on what you pay for that cost. So, it just depends. So billboards, I don't know if you do billboards, you get a client and you give that client a gift for their new house. How much of that is tax deductible? I wanna give Danny $500 gift card. How much of that can I expend?
Take it. Is it $25?
$25.
Oh, you know.
That's the max. So, if a husband and wife, how much can you spend?
$50.
$50. That's it. So, I know you guys want to be generous and give these clients really good gift cards.
So the
But
bank
just,
ask you for, hey, can I have 1% of your commission or so?
oh my,
Yeah, yeah.
really? That actually happens?
Yeah, they
Yeah.
ask you, hey, can I have, take 1% of your commission?
Oh, wow, I had no idea that
You don't have
was
like,
actually.
you don't have a real estate license.
Yeah.
You don't have a license.
Yeah.
That's it.
Oh, well, that's a good point. So do you sometimes have a referral fee?
Yeah, that would be someone that's licensed to a broker, their broker,
Exactly.
not just.
Some, like a client. So a referral fee would also be deductible. So if
It
you
may
pay
not show
someone,
on your 1099 if you've already referred it back.
if you've already
If
referred.
it goes through the brokers, but sometimes the broker 1099
Yeah,
whoever.
it's deducted right off the top, it doesn't show on your net, check, so it's taken out before.
So you're being paid a referral fee, is that what we're saying? Like, or you have to pay someone?
Yeah, say you get 3,000, you're paying out 25%. Instead of you get already have taken that deduction out, so you can't.
But
finance it right.
But the 1099 reflects 3,000.
Yeah.
So that's
Not the 1099 should reflect
the
amount that
actual amount. Okay.
The gross amount to you.
Yeah, so it's kind of like the same thing. Whether we report the 3,000 as income and let's say $1,000 is an expense, the net amount is still the same. So however, if you want to do it the gross way, you can do that way, or you can just report what's on your information. You brought up education and training. Anything related to your license is deductible. So if you have coaching, if you actually pay for someone to coach you that has a ton of experience in doing this and you pay them for that, that's deductible.
Like my salary is
Yeah, whoever, I mean, I don't know if there are real estate coaching classes, but I'm sure there are, and I know those are expensive. So, any type of mandatory continuing education that you brought up, tax deductible. If you have an Audible subscription, let's say you buy a real estate book because you want to learn about X, Y, Z in real estate, and you buy an Audible book on that, tax deductible. So anything that is related to your, sometimes they have like all kinds of different apps. If those apps are related to your license, same thing. You can deduct it. You can do online courses, anything, and everything related. I don't know if you already have real estate classes, but let's say you sign up for a class, tax deductible.
So
Yeah.
going back to
No,
the subject
go
I
back.
mentioned earlier, being an individual, writing out your tax return, you need to be a contractor,
Yep.
and having an LLC, you're an employee of the corporation.
Correct.
Tax benefits, percentage-wise, what do you pay on one, what do you pay on the other?
I'm going to give you, so
Right off the top.
we can use an example. You make $100,000, right? You pay 25 in federal income tax and 15.3% in self-income tax. So right off the bat, you're paying $35,000 on the 100,000.
25 and 15 is what?
40%.
Okay.
Yeah, so you're paying $40,000 on the 100,000. Let's say you have an LLC that is taxed as an S corp, right? You can shelter some of that 100,000 and not pay the self-employment tax. So let's say out of the 100,000, you pay yourself 50,000 in wages. So now you're cutting it in half.
And how does you show the other 50 that is it deferred or is it?
So no, it's not deferred. The LLC will file its own tax return. The LLC doesn't pay taxes. So once you file the business return, the business gives you, the owner, what's called a K1. The K1 is going to report that income. You're still going to report 100,000 total. You're just going to pay a lot less on tax because you have sheltered some of the money from the self-employment.
And the shelter could go, let me ask you, the shelter, can you have a corporation and have, not a 401k, but two independent, what do they call it back in the day, a step account?
Step IRA. That's one of the things that we're going
And
to.
deferred, but that one
You can
deferred.
have a step IRA right now. You don't even have to be an LLC. You can have a step IRA and you can contribute up to like 56,000, depends, of course, that's the maximum you can contribute to your step IRA.
I thought it was like 15% of your gross or something.
Up to 56,000, 25% of your self-employment income. Yeah.
25% of your gross.
Mm-hmm. Yeah.
And the money gets deferred, you don't, not until you retire, that you pay taxes on that money. And you earn interest, deferred money.
Exactly. So, but you would have to put the money into the account. You cannot touch it until 59 and a half. Yeah. So you don't have access to the money because then if you decide to take it out, then you have to pay penalties and additional taxes. Yeah. All right. Licenses and dues. I know you guys have like MLS dues, the National Association of Realtors dues every year, I believe that go there. So all of those. Um, Association and board dues. What are board dues? Do you have? I think they can take on the board. Okay. Yeah. And then do you have any realtors that are? We have a couple. Okay. Yeah, we do have a couple that serve.
I think that's referring to the lot that is more of real estate.
Mm-hmm.
How about that, MLS is out our way? Yeah.
So what?
Obviously, the MLS is out our way, they will not.
Oh no.
No,
Okay,
the
we'll send that to them.
organization has paid $50 to get to political action committee.
Yeah, which you can actually waive. You don't have to pay that. There's a way around that. The MLS fees, yeah, but you're right. Anytime, I didn't even realize that there was a political portion. I'm not sure what they consider. Okay.
Because I've never done, and I know we have agents here in our office that are on the grievance committee or
okay?
on other different
Committees that,
boards, yeah.
so you're absolutely correct. Any type of political contribution would not be
Why
deductible.
is that? I mean,
It's political, they don't want you to.
oh, buy politics.
Yeah, pretty much, and take it as a.
So anyway.
So do any of you belong to the Chamber of Commerce? Do you pay fees to the Chamber of Commerce? You do, yeah, any of that, I know
We
that.
do have a couple of
Yeah, so those are, tax deductible expenses as well. I know you guys don't have franchise fees, but sometimes, I mean, sometimes I know certain realties may have franchise fees, and you have to pay the franchise fees. I don't think you have that with, Cornell. Brokerage fees, desk fees, any of that would be a tax deductible expense. Transaction fees, so how many of you have separate bank accounts for your businesses? I would highly suggest doing that. I mean, because when you start mingling personal and business, it gets a little bit convoluted, so. And you know, it depends on the banquet, it's really not a big deal, just add another account under your account and other accounts and just keep that 50%. It just makes things a lot easier, at the end of the year. So, talking about bank, you can deduct bank fees, if you have a bank account, you can deduct those fees. Bookkeeping fees, I know if you guys are doing your own, if you keep track of your own expenses and income, or if you pay someone to do it, they have virtual bookkeepers now, which are fairly inexpensive. Once your business starts to grow, I would recommend doing that, or just pay someone to do it for you. Average fees are probably $100 to $200 a month, for something like that. If you have, how many buy laptops, cell phones, uh, printers, anything, what do you guys have in your house or here that you use for your business?
Internet,
The internet here or at home?
internet at home.
At home, okay? And we'll come back to that point. But give me an example of anything that you have purchased that, you could explain.
desktop, laptop, iPad, iPhone.
What is that? There's a percentage of it.
As long so here's kind of the general rule. If you, I know a MacBook could be quite a bit of money. So up to $2,500, you can expense the entire $2,500. Again, you would allocate a portion of that to personal and business use. It just depends. If you have a separate computer at home that you use just for personal, and you have a dedicated computer that's strictly used for business, 100% of that would be deductible, up to $2,500. If it's over the $2,500 limit, then you have to capitalize it and make depreciation on it.
Is that just for the one item, the 2,500?
No, per item.
Per item. So if
Per
you
item.
have all of the above.
Yes. So it doesn't have to be a bunch of items. Let's say the office here decides to renew all of their computers. As long as each computer is less than 2,500.
What about
Auto expenses. Yep.
you know, what it's about?
Exactly. So, is that car strictly real estate car, or is that car used to go pick up kids from hockey? Okay. We want to make it 51 versus 50.
Oh, okay.
51, yeah. Because you want it to be above 50% business use. A lot of times, you guys can justify it. I have clients that it's a little hard to justify business usage on a car when you just to work, and then from work you just come home. So that's a little bit more difficult. But how many of you keep track of your miles?
I used to have to ask, actually. But now I run the offices, but I know like people who have offices within their office, every day, they'll sit in their office all day long and work and then go home or whatever, and you on those miles.
You can't.
You can't. I was from school.
Commuting Commuting to and from work is not a business. If you
If
go,
you have an office, you can
uh-uh,
work out of, rather than working at home.
I go to my office, from home to the
Yeah.
office.
It's supposed to be from the office, whether it's at home or at his office, to a client's house and showing property, that's what you can deduct, and not from your home.
Commuting to
I mean, if you
South
go from your home office to show property,
Yep.
or
100% deductible, or, I mean, I wouldn't say 100%,
Now, right, then, and they said you could do that. Okay.
I'm sure they did.
That
Yeah,
was a long time
yeah.
ago, too.
Yeah, those are considered commuting miles. And now, how would the IRS ever know? You know, again, and I tell people, like, I know you guys have phones and you have all kinds of stuff, but the older I get, the more I refer back to people, which is weird. Keeping track of all of your appointments, and you probably have them on your phone, in your calendar, extremely important, because I did have an audit. I didn't do the return, but the client came to me. They had an audit, and that's exactly what they went after. They went after the auto expense, and they were claiming like something like 80%, and the IRS said, nope. Show me substantiation. If you don't show me any substantiation, I'm gonna disallow the whole thing. So calendar appointments that you can go and say on this day I went here or I showed that house or did that, that's good enough.
Okay.
So as long as you have something to back it up. They'll ask for printouts of your calendar. They would ask for mileage. And I have people that they may just get a piece of paper and every day they write down how many miles they drove or whatever. The app gets a little convoluted. I used to use it, but it's overwhelming. Because it's like stop, go, calculate. And it just, sometimes you just don't want to do that,
Oh, do you use yellow pad?
Mm-mm. Oh, yellow pad, yes. Yes, the yellow pad. But that's, so talking about eyes, back to auto, we might as well just cover it. So two ways of doing that. You can do the standard mileage deduction, which is 56 cents for every mile you drove, and for this, 56 cents in 2021. So if you drove, yeah, if you drove 10,000 miles in 1 year, you can deduct 5,600 business miles.
Wow.
Um, so in addition, if you decide to use the mileage, keep track of your miles. It's extremely important. Any pets, we don't have parking poles or anything like that. That's parking fees. So let's say you go downtown for something, to attend some type of real estate conference or something, the parking fees would be tax deductible. Um, in addition to the mileage. If you have an auto loan and you pay interest on that on the loan, the interest portion of it would be deductible. The other option is somebody leases a car. A lease. Again, you have to tell your tax preparer. I use this car 2% for business, 48% personal. How do you substantiate that? I would do it based on your miles. If you drive 20,000 miles per year and you drive 12,000 of it for business, you calculate the percentage and that's what you would use. A lease, you don't have to, so with a lease payment, you just deduct 52% of the lease payment. Everything else is personal. If it's $1,000, you deduct $520 when it goes to business expense.
for the percentage of the payment, not the miles, or
On the lease, so you have either miles or actual expenses. You can do both. You use the mileage to kind of tell your tax person, like this is how much is business, this is how much is personal. But it's either or. It's either miles or actual expenses,
it's probably better, a greater,
depending on how much you
write-off on the
drive.
miles, right?
It depends on how much you drive.
You can use either one.
Either or. Yes.
So if it's a lease, you can use either or.
If it's no, you can use either or. You can use miles or you can do the actual lease amount. When you do actual expenses, you see on here. So let's say you bought a car, and yeah. So if you bought a car it's an asset, right? So now we have to put it as a capitalized asset, so it's a vehicle, and then pay depreciation on it. They have really favorable, like bonus depreciation, depends on how much the car weighs, if it's one of those luxury cars, I mean, the rules are a bit more complicated. But you do have the option of depreciating the car and taking that expense.
Is that yearly?
Yeah.
This is what we
So let's say you buy a car for 40,000, and let's say we decide to expense it fully, that's it. You get the deduction in the year that you bought it. But that's a good tax planning strategy. So let's say we don't want to pay the whole expense this year, so we can spread it out over 5 years. Yeah. So you have options. DMV fees, gas. You guys have separate gas cards for your cars, or does it all go on your debit card? Good. That's the easiest way to keep track of it, right? And you download it at the end of the year, it's all right there. Depends on what credit card you use, it would tell you gas. And you just sort it by that, and then you're done. Um,
If you use the miles, then you don't have to pay a mile.
Nope,
Oil,
you don't.
insurance, blah, blah, blah. You don't use the miles. Keep the thing.
You just wanna maximize it, right? Because what if the DMV fees and the lease is higher than the actual mileage? So I would have both, and then let your whoever does these taxes, like let them know, like let them do it and see which one is higher and which one's benefit to them. Yeah. Because again, you want to get that amount as low as possible because you don't want to pay the tax on that, right? Insurance, a lot of insurance right now, it's all, your house, your car, it's like umbrella policy. You have to break that out. You can't just go, okay, I pay 300 a month, and I'm going to take 80% of it for a business. So you kind of have to go in and see what you pay for your car insurance. You know, sometimes when you have 3 cars on there, it's just, yeah. Um, yeah, license, registration, maintenance and repairs, parking and tolls. And DOB makes it easy because you can just log in and you can.
Okay, then, yeah.
Okay, good. Good. Do you guys travel a lot for your? Like, do you ever go?
Some people do when they're doing the classes, like come there, we have locations like San Diego and different places. So you're talking to people who will travel, yeah, you know, in your airport, hotel, all of that.
Yeah.
That's
Let's say you go because you have a class in San Diego, but you bring the whole family with you. And out of the 5 days that let's say your vacation is 10 days, but out of you only do business for 5 days. And then what happens?
Right up 5 days.
5 days.
Don't get serious.
Yeah. The rest of it is personal. Yeah. I had someone try to do that day cruise. And I was like,
Oh, there's a seminar on the cruise.
if there wasn't. There wasn't a seminar on the cruise. I had to go already. Yeah. Yeah, but, so yeah, taxi, Uber, anything like that, baggage, shipping,
Baggage on the plane is deductible?
anything you pay for the
Like
baggage.
the business and that's cool.
Dry cleaning. Okay, so if you guys have to, look presentable and you pay for dry cleaning, that's deductible.
Oh, so only when you have a uniform.
Not necessarily. I would deduct it as just your clothes. Like if you bring the whole family to get dry cleaned, when I'm in. So yeah, if you buy new suits or if you buy anything new that's specifically for this, I would deduct it. Business entertainment. You take a client out to a show. Is that tax deductible?
25 bucks.
Nope. None of it, it used to be 50%, they disallowed it completely. You take somebody to go golfing, is that tax deductible?
If you talk about real estate, trying to sell them the property.
Not tax deductible because it's considered
As long as it's
entertainment.
$25 or less.
You take a client to a really nice dinner, is that tax deductible? Yes, 100%.
And not golfing on it.
So what's the difference between dinner and a
Pretty
show?
often,
If you eat during the show and you have dinner during the show,
you
it
do.
makes a difference. But if you just buy them tickets to go see cost, and let's say that's a gift, you buy the ticket and
As long
give
as
it
it's
to them.
$25
$25. That's it. But let's say you go with them and you pay for everything and you just,
You do know.
Let me ask you about hotels.
Mhm.
They count their time to a boxing match, to a show and all that, and I'm sure they write that up.
the fair market value of, but they have to pick up the revenue. So it's the hotel, right? The hotel is selling the tickets or giving the tickets.
The hotel counts the time ticket.
It's like zero value. I mean,
But they write it up within the front. The ticket sell that ticket or comes to the client that gambles.
but they have to match the revenue. So whoever takes the expense, someone has to recognize the revenue. So either the box office says, I need to pick up the income, as long as they pick up the income, they'll write it off. But it's, yeah, yeah,
So you have like the $20 for the,
yeah, makes sense.
so for the meal, there's no,
Mm-mm.
and so what about for the whole year? You can just write off $10,000
And yeah, would the IRS look at it?
Yeah, of course.
It would. So do we want to be somewhat reasonable? Yes. Yeah. It used to be 50%. They used to limit it to 50%, but they actually for 2021 they increased it, and they did the increased it to 100%. But business entertainment they disallowed. I don't know what the reasoning behind that is. Because I feel like the entertainment is a lot more expensive than the meals, right?
Let me ask you, what are the red flags that the IRS will really look at and you're trying to write out? Things that are,
Auto, your vehicle expenses.
I don't know, miles.
They would look at that. They would look at the percentage of new business use versus,
As long as you do the numbers this way.
and that would always be a huge red flag.
Per mile,
56 cents per mile.
56 cents per mile. And you do 10,000 miles, that's 56 bucks. I write up right there, so basically per mile.
When did they go up to 56 cents?
It was higher last year. It was higher in 2020. It went down. It was like 57.
I mean, I remember when it was like 46, 48 cents.
Yeah, so it went down. Yeah, and May, I have to see what 2022 is, but, yeah.
What other red flags?
The meals would always be, because it's a separate line item, and, so they would look at that, and auto, if they see 80 or 90% business usage for auto, that would be a red flag
Probably, if you can.
with that, yeah.
Oh,
Home office, so somebody brought up internet, right? Do you guys run space here? Do you have a place in your house that you use for your home office? Okay. Okay. Is it strictly designated for that?
It is, like, I think some here most of the time.
Okay. But it's still there.
Nobody uses it because it's for that, but,
Mhm.
you know, I'm at home later.
You work and that's your, and it's a home office. Now, do you do real estate full time?
Yeah.
Okay. So you do have that's another red flag.
Yeah, but I have my training in my life, have it there.
For home office, yeah. So you are allowed to take a home office deduction, whatever that square footage is. I'm just gonna throw numbers out there. So let's say it's 100 square feet. There is a safe harbor. You don't have to do any calculations. It's $5 $5 per square foot, you get a $500 deduction.
Wow.
Or you actually do all of the calculations, which would include all of your utilities, power, trash,
For the whole house.
for the whole entire house. And then what's gonna happen is, let's say you only use 100 square feet out of 1,000, that's the percentage that's gonna be allocated to the home office. So you take everything. So a lot of people are like, well, my mortgage payment is $1,000 a month. So do I just take $1,000 and no? Because you're paying off your house, a portion of it is for the house, a portion of it is interest. So only the interest portion that can be roughly towards your home office. If you rent, and your rent is $1,000 a month, the entire $1,000 can be used in the calculation. So, yeah.
So do you rent your house if you're using your home office for your work, you can still write off your whole rent? bill?
Not the whole rent payment. So, again, it would be a percentage of your home office in relation to the whole house.
Okay.
So think about it as a little box, right, out of the whole box.
Mm.
But the rent, you know how mortgage payments have principal and interest? Only the interest portion of the payment you can use for your home office. So people that own a home, you get the 1098 at the end of the month, at the end of the year for the mortgage interest that you paid. A lot of people take a deduction of their taxes. Since the law changed, you don't see that a lot, but you can still take advantage of it on your home office. Yeah.
My husband works from home.
Mm-hmm. Now, your husband works from home. If you're a W-2 employee, you cannot take home. So as long as you're an independent contractor, you have your own business, you can make the home office. If you're a W-2 employee, you cannot. They change that.
If you're both, there's a lot of savings for investment.
Yeah, a lot of us invest.
So a lot of it you would allocate probably. I wouldn't be so aggressive to say, well, this is my home
But it
office.
also depends if they are joined, like, for example, if they're doing it.
Yeah. And I don't know if they have one space, two spaces. I don't know how their house is set up, but yeah. So I mean, it's basic cleaning. If you have a pool maintenance, all of that. Anything that's related to your house, you would add up at the end of the year, and then you would allocate a portion of it to your home office. Nothing. Not a single
But your
thing.
home office office has
Not a single thing.
90% of our agents work from home.
People that clean your house. I mean, anything that you do for that house, it's crazy. You know, it's yeah.
When you break your house into family room, living room, you say, well, I use one bedroom of the house for an office. That would be what, an eighth of the house or whatever?
Whatever your square footage for that office space is. It has to be strictly designated for that purpose. Like, that is the only thing you do in
Square
there.
footage in their room.
Yes, so if your house is hypothetical 1,000 square feet, and you're using a 10 by 10 room for your office, which is 100 square feet, that's 10%, right?
Yeah, 10%.
10%. So all the bills that you pay for your home, you're going to take 10%.
But you brought up internet. The internet would be the only item that is not going to go into that calculation, because internet is, you would say, I use 70% of the internet for my business. So you take 70% of the internet bill and you deduct it 50%. Because that is directly related to
Yeah,
you using exactly. You cannot, you know, you could think it's solar without power, but they don't look at it that way. So, so home insurance, all the utilities, yep. Nevada Energy, Southwest Gas, Republic Services, HOAs, all of that. So,
You have to be careful what you sell it for, because if you sell your actually put your client to the bedroom in your home, it's a little different.
yeah, that's it. And Mr. Klein is what, your husband? I hope so. Yeah,
You know how last year during the pandemic, when offices shut down for a few months, we took, EUA, employment
Yeah.
or self-employed,
mhm,
and then after that, we went back to working.
Yeah.
So you have to, so that's also income that you could, on the self-employment, um,
and the PUA, a lot of the, unemployment should have been excluded.
So on that,
Because
you
it was like
can,
$10,200, I think, that you didn't have to pay tax on. I think that was it on tax year.
so on that, on unemployment, can you put expenses on that or only on the income generated from the system?
Only the income tax.
So on that, on the,
That's a really good point. Yeah,
so the first 10,000,
it should not have been.
and there was a, only for the first one?
I think it was like 10,200. Don't quote me on that, but we can look it up and see.
10,300.
Yeah.
On that, you don't pay tax.
Mhm. And they enacted that pretty late on in the year, so a lot of people have filed their taxes already. So what the IRS did is they actually automatically went back in and readjusted your return for this year. Yeah.
So anything above 10,200 is to pay taxes on.
Yes, and don't quote me on the amount. I believe that's what it was, but I would have to double check. Yeah. Yeah, and if you were married, then it was like 20 some yeah, the unemployment. Do you guys have any like PPP loans or anything like that, or is that just the?
So it's getting that when you were getting, unemployment, so.
Yeah.
But I was told that the PPP is completely separate from this, like, based from the existing.
Yeah. Yeah. And a lot of it was forgiven, so you didn't even have to pay it back.
Sometimes money is like 15, 20,000.
Without a lot
They
of
don't even have,
Yeah.
they don't even have a business, they just
Yeah.
created some.
Yeah. Yeah.
That's just,
Yeah.
things are done.
Yeah. So, all right. Insurance tax deductions. How many of you have to be insured with your licensing and all that? Do you have to have like insurance in the state of Nevada? No?
You know?
Is there like errors and omission insurance, DOE?
Yeah, that's
E&O?
our membership.
Okay.
Yeah. Some agencies do charge.
What do you mean membership?
So the way Cornell has it set up is you pay a yearly membership or monthly,
So
however you want to pay it, but it's all included.
Okay.
So some agencies and towns, they charge you separately.
So it's almost like the franchise fee that I mentioned earlier. So any of those fees that you guys are paying are.
So how do you get to that, if you want, let's say the first 7,000, how do you get to the benefit you want? You find out what the policy is.
Whatever you pay for your membership.
Yeah,
So if
membership
you're
is
paying
included.
$35 a year, you come out
Yeah.
and you pay
Yeah,
$35.
exactly.
Yeah, but part of that money goes to the broker for the profit, and then part of it is. to
But-
them.
Yeah, whatever you
Well,
pay, the fee is, yeah,
You're writing off the whole thing?
yeah, the whole thing. The whole thing. Yeah.
Whatever you pay what you're currently at, that's the expense. You would write that off every year.
Yeah, but I mean, you know how the broker gets, let's say you made a $10,000 check, he takes the 450 per transaction, and then the $10.99 that he gives you already have that taken out.
Yeah.
So you're not, on your income is not showing the 450 that he took out per transaction.
Which is fine, because again, you would either report the full 10,000 and deduct the expense, or you can just report the net amount that you reported on the
And
1099.
then you'll get the
Either way, you're gonna get the same number.
if you didn't pay, it's not really, you know,
No, but I mean, you're paying up to 450 that you take,
I'm not in the 1099,
it's one of the, yeah, so it's not showing the income.
you're not paying.
Yeah, you're not exactly, they've already, yeah. Now, if he reported 10,000 to you, and he took fees out and didn't report the fees, then you can go back into the expense. So, yeah. Yeah, but normally when they do the 1099, I think, yeah,
On the DNO and 20 services, whatever it is, the
So yeah,
policy.
Getting it every year.
Yeah, and if you go in and you get, let's say you get your own insurance and you pay for it yourself, then that would be deductible. But since you guys are paying a fee, annual fee, I would deduct whatever the amount is. Health insurance, how many of you have health insurance? And do you pay for, who pays for their own health insurance?
Because I don't have so many jobs.
Okay, so that job pays for it. But yeah, let's say you did this full time and you have to pay for health insurance, then, and you're the only person that would cover the family, then that whole entire thing would be done. For your spouse, unless your spouse is employed and they offer health insurance to him for his job, then that makes a difference. But if they don't, and you are the provider and you pay for the health insurance, too, even if you go through the exchange.
Okay, so what if your spouse is covered, but the spouse is not paying for
You. For them.
Then that's you and your children?
I have to look that up because in the back of my head, something says that if you have the option to get coverage somewhere else and it's available to you, then you, yeah, then you should not be able to.
Well, I'm just saying that because you have a lot of money to family.
Yes, oh yeah,
So you
right.
have people who are not gonna pay insurance to keep it on paper.
That's a good point. But from what I recall on those rules, is as long as it's available to you and the children, then. And it may be different if you file separately, married filing
Well,
separate,
that's
which if you're married filing separate and you're responsible for your own, then I would say, if that was me, I would have done it. Yeah. Okay. Home office, professional fees, I mean, yeah, we kind of talked about that. Legal fees, MLO fees, contract fees, all of that would be deductible. Cell phones is another, actually, cell phone is another red flag for the IRS compliance because people tend to deduct 100% of their cell phone bill, and that's because you don't need your cell phone unless you have a designated cell phone just for your real estate business. Then I would say that's fine. But if you're using your phone for personal usage and business usage, then you have to allocate it between your yeah. Okay. Selling expenses was on there. Um, does that happen? Do real estate agents sometimes pay for appraisal fees or inspections? Okay. So tell me about
being reimbursed.
okay.
Because of escrow from your client, some year yeah.
Yeah, what if my one thing is that
Exactly. So
There's that $25.
homeowner who does $450 or $500.
I wouldn't necessarily call that a gift. If you purchase the home warranty directly, it's part of your selling expenses, and I would deduct it.
I like that. Yeah. Okay.
Yeah. Gift is more like a personal, like home warranty is not required as part of your closing account.
But it's not.
Yeah.
But it's an option on there, it asks you if you want it, if the buyer wants it, and then it says who will pay for it, seller or buyer.
Yeah.
So, I just looked at it this morning, and it says buyer wants it, and buyer will pay for it.
But sometimes you tell them, because you don't have an office at the agent,
No, it's a lot of them.
But I'm just saying, because I know that, so I do have, I blocked one, right? And you think about it, I was like,
Like the robber years ago, in the Mountain Bed catalog that comes out in Mountain Bed. He's like coupons in there, and he has on a coupon that says that if you purchase a home with him, that he will pay for your home warranty. And there was transaction fees and things like that. So, you can have it on a coupon, and you can show proof that you've done for an X amount of years, how to do the coupon.
Oh, 100, but even if he pays
So
it,
that's advertising too.
yeah, it is.
Oh, so yeah.
But I would deduct it if you try to pay it.
There we go.
I think that's a quick story with, I've been doing real estate for almost 7 years. Home warranty, on
Yeah.
some transactions. You know how agents say, no, let's not get a home warranty. I went many years ago, I went to court on a transaction that went to court. Because after we closed the deal, few, farming issues, electrical issues, and at the time, I paid for the home warranty, and it worked in my favor in front of the judge, because I could have said, well, the buyer's not asking for it, the buyer's agent is not asking for it, I offered it and I paid for it, so it saves my liability in the transaction, so I'm, in my case, I went through that, and I'm all for home warranty,
Yep.
whether buyer pays, seller pays,
Or
my
agent.
agents is
Yeah.
split it, agents is split it, or we split it 4 ways.
Yep.
I'd rather there's a home warranty on the property, because once you go,
So
and
can
the
I
AC goes out, and then there's that $4,500
$4,500
ticket, or whether there's a home warranty, the home warranty may pay for you.
Yep.
Burn my mouth.
Oh, yeah, yeah, it is. You're like, oh, shoot. I would not do that.
That would have been a day.
Yeah, yeah.
Liability on
Oh,
the
yeah.
broker, then
All of that.
the buyer was, the AC went out, and it's freaking 117, and
That's not good. And you're the one that,
and then they say this, and the home warranty kicks in and pays for a year, so you don't have to pay for
good.
the clean and all that, but, I mean, I'm
Yeah.
all for it myself, but.
Who pays for all the photographs and stuff, like when,
That's one
The
thing.
agent pays for it, so all of that.
That's how taxes.
Notary fees, photography, staging fees, if you bring snacks and water and all of that to, an open house or whatever, again, all of
That's
that.
not limited, right?
Uh-huh, yeah. Not limited.
It's getting expensive.
It is.
Video and professional photos.
It is, and the drone, yeah, what if you buy a drone?
That's that one.
You did. And my husband told me this thing.
How do you prove that the drone is for only this? How do you
It
do that?
doesn't have to be on the business. So what if you use it mixed usage? You use it for business and you use it for personal use?
Traffic for, every day.
Yeah, but you can allocate some of that cost to your business if you use the drone to do the aerial videos and all of that. For sure. We suggest you think about things like that nowadays.
I mean, there's still, there's still a lot of deductions, there were things that was button,
Yeah.
there's still a lot of deductions for anybody that owns a business. This applies to a restaurant, a place, a business related, any type of business you own, rental property, you have.
Actually, I'm glad that you brought up a point that I was going to talk about. So, do any of you own rental properties? Great, because most rental properties would incur a loss at the end of the year because of depreciation.
So it's different.
Because you're a real estate agent, you can deduct that loss. Most people cannot. Most people, it's a passive loss and it gets to be carried forward until you actually get income and then that's when it
Or
goes on.
when you sell the property,
Or when you sell the property.
then you write off all the.
Yeah. But as real estate agents, that's considered active loss to you and you can get a deduction for that.
Every year instead of waiting.
Every year instead of waiting. If people make $150,000 or less, they can deduct up to 25,000 in losses. There is a rule to that. But let's say somebody's income is higher than that and they have a loss, they cannot deduct it.
You can deduct, isn't it 3,000 a year
That's capital loss.
on capital losses? Is that changed at all? Or good, I still got another 150 years to do that.
Yeah, no. Unless you get capital gains, then you can offset.
Yeah.
You can offset it. Yeah, if you buy cameras, do pictures, that's deductible. Just talking about equipment. Computer, equipment repairs, spare keys, lock boxes, printer, scanner, staging items, measuring equipment, all of that would be tax deductible. So just as you go and you spend money, just think about all of those things and write them down, put them in an Excel spreadsheet, do something with it, you're gonna forget. Yeah. Um, Office supplies will have more case of be anything. Desk, chairs, bookshelves, folders, paper, pens, postage, toner, stationery, speakers, television, all of that stuff would be a business expense.
You get all that from
Yeah,
I was thinking everything was in that.
which is not, which is not bad at all. If you have like virtual assistants, I know a lot of people are getting virtual assistants. You know, like, I don't know, isn't it, you pay like an app or something and they send you this virtual, do you guys know what I'm talking about? Like virtual assistants?
They have them, I don't use them.
Nobody, oh, okay, I just know people that use the virtual. Like, if somebody likes the property or something, they set it up to this app and then you have the client. A lot, yeah, they would be like, oh, I'm from somebody's virtual assistant, and this property came up, and you'll get all of these rings and stuff.
They have virtual doctors now, I want to do virtual visits.
Just quickly, I know we're running out of time, but like the self-employment IRAs, so you need to set it up by December 31st if you decide to contribute to your own IRA. And it depends on how much money you make. You can contribute. It was like what, 56,000. Yeah, 56,000. So,
You haven't put December what they put in
to
there?
set up the IRA, but you have until the filing of your tax return to contribute. Yeah.
Next year.
But it has to be open by the end of the year.
Or defined benefit plans still.
Defined benefit plan, yes, I have a client that's a real estate agent and that's what she does, and pretty much empties out her entire, and everything should be, she can do that. That's her husband. So, yeah. So she does that, the real estate property losses, we talked about that, so if you're a real estate agent and you have a rental property, you can deduct your losses, which is a nice brush to have. Setting up the LLC, electing export status. I tell my clients, like, if you're making $20,000 to $30,000 a year, that's probably not the time to do the export election. So let's say you start making 75, 100, 150,000, then it's time to start thinking about that.
And all the features they use, setting up and all.
All of that. Yes. Anything, yeah. All deductible if you can. And again, you have to pay $350 every year, but it's worth it if you
That's
don't
for,
pay.
that's like a tax for having an LLC, and that's paid through the,
Even about a silver loan website, in about a Secretary of State.
Yeah, well, we also have to, both the agents, we also have to have these fees.
Yeah.
And
Just
for
like
county.
Yeah.
So those are tax deductible as well.
That's right. If they practice out of condition, I think they have to have a city offenders and license too.
Yeah, I'm not allowed to do.
Yeah.
Okay, how can we,
Yeah, you have
how can we
that county or
work
the
in,
city.
belong to my,
Yeah.
and possibly supposed to be.
Yeah.
But yeah.
A lot of people that make yeah. A lot of people like yourself, you make money and you forget to pay taxes. Taxes should be paid on a quarterly basis. So you're not stuck with a large tax bill from April 15th because they will penalize you for not making your payments. So as you start making money, again, that's why I think it's so important every month. If I click on these things, I can tell you, hey, in May of 2021, what was your net profit? Right? So and that's what I stress it with all of my clients. I was like, this is your business. You need to know where you are. Are you profitable? Are you losing money? What has to change in terms of
Well, next month we have somebody coming in and actually going over on how to do a P&L
but
of your business. So you can track.
Good. Good. If it's extremely important. And again, software like QuickBooks, it's so easy because they will do it for you. You just, income, and then you categorize your expenses, and then you have it every month.
What
So
was that software again?
QuickBooks,
Oh,
QuickBooks, yeah.
I only know the
Yeah.
But they need a card.
I have to.
name.
Yeah, but, yeah, I know, right? But you guys can go on my website, my phone number is on there, email address is at the bottom of that paper, yeah. And I have some good, like, little checklists on there that you can, like a newsletter every month, so, yeah. Any other questions?
Yeah.
I hope this was
Why don't
helpful,
you have
it's actually fun, but, again, yeah. Yeah. There's no contribution. But, yeah, so I mean, as long as they have, yeah. So, yeah, do you know how it is? Material, budget? Okay, yeah, I was thinking I had to use every yeah. So, who submitted the other? Okay. So, single member OLC with a company like that, I would. Oh, no, we do somebody else. Okay, somebody that you know, yeah, because it's single member OLC. Well, that's what I'm trying to figure out a little bit, I feel for it. So, yeah, and it depends, if they start looking a lot of money right off the bat, I'll really do that. Okay, and we also do people. Yeah, so it's not, the crypto could be included in the crypto. Yeah, that's from my, yeah, so the crypto is in there, whoever your crypto is through should give you registration. Yeah. Okay, perfect, yeah, and then I will probably text you. Yeah, maybe we can meet. Yeah, I'll give you my cell phone number, yeah, if you want it. Yeah, I can text you right now. What is it? 702-505-1384. And I can text you Claudia. Okay, yeah. Components, so you know more. That would help.
Where's your office located?
I'm in Henderson, actually. I'm up in Anthem. Yeah. So, way across town.
That's good.
Yeah. Oh, I got it. Perfect. Okay, perfect. Thank you so much. I will contact you soon. Yeah, okay. Go grab coffee. I'm out for that too. Okay, perfect. All right. Thank you.
And we do quite a few real estate agents,
Real estate agents and escort that for the real estate agents that own the business. So, yeah.
yeah. So this is the number was 505-1384.
1584. Yeah.
Let me ask you, when I do my taxes, I usually come in with a list of all the itemized yearly expenses, so I don't have to like, I know back in the day, I used to hang them a bag of receipts and the receipts and that was expensive.
Oh, yeah, it is expensive. You have to like add it all up and.
So you're better off just getting all your expenses
And this is what I'll tell you, if somebody does that, what I put in red letters is PDC, provided by client, because ultimately the responsibility is on you to substantiate every
all
single
your
item.
expenses.
I will take it on your taxes, but if the address ever comes back, if they come back, make sure that you can provide substantiation, because I would ask you, and I normally have my, client sign engagement letter, that pretty much states exactly that. That you have to just,
Keep your box and keep for how many years? About 5, 7 years, or?
the statute is 3, if it's due to fraud.
I have a quick question. You say you have your LLC and you pay yourself, and then for yourself now have a K1, file as a K1. So what type, what is that or after the employee versus?
So, exactly, so you get a deduction, so it's a business expense that comes for half of the bill.
Right, for the business,
Yeah.
but then the employee version, you have to pay the taxes of $50,000.
So you pay 7 point whatever, something. Yeah.
Oh, so you can pay yourself $100,000 and owe $7,500.
But if that's the case, then I wouldn't even file the appropriation. Because if we write it down on paper at the end, if you have an export versus how you're filing right now, the taxes are going to be applicable to that.
Oh, so don't pay yourself first. That's what I'm wondering. How much do I have to pay myself?
Yeah, exactly. So, the rule is, this is your money, so you can basically figure it out. Let's say you only take out 10,000.
I got the
Yes, okay, I got your number, okay. I heard it was amazing, I don't know why, I just did it this morning. Out there, so I was like, oh, you watched it? Yes, I'm like, no, that is funny. So because usually when I'm hosting a class, I don't sit in on the class because it doesn't usually pertain to me, but you absolutely would pertain because you're taxes. So, Bonnie was like, I tried to have her back, I know this is gonna be busy, but yeah, I was totally doing it. I was like right before, somebody was doing it, I hope it's somebody that's like a company. It's the other one, the other one. Okay, we got, okay. We reached the good, so, yeah. Well, if you're interested, and I know Bonnie would love to have you back, like right before this tax season, just to give everybody a reminder, answer questions, and I know it'd be great for you. I need you. Hello.
The more we know about taxes, the more we get to keep of our money.
I don't know about it.
Thank you, it was a great class. Thank you, ladies.
I don't want to take you seriously. No, and you guys tell me, if it's like